Hello, 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 everyone. Mike Arnold's here, co-founder with Path Trading Partners, along with the soon-to-be on Bob Iacchino on today because he couldn't make it yesterday. Good afternoon, Davey. Good afternoon, Sashi. Good afternoon. Amadeus is back in the house. Hello, Lauren. All right. So you got those little mini doubles trader. Nice little bounce today. Little volatility with that bounce. We had durable goods. We'll talk to Bob about that. Durable goods. Pretty decent miss we covered this morning. Pending home sales. Still a disaster. We'll ask Bob about the crude numbers. And Jackson Hole kicks off tonight. Real quick with tomorrow. We got the quarter over quarter GDP for Q2, the second estimate, the second revision. Remember, the first one came in negative 0.8. We got continuing jobless claims with the magic number of 1456 that we're looking for in a long term. That would be a very strong confirmation of a recession indicator. We got core PCE prices tomorrow. And we got Kansas City composite and manufacturing, but the big stuff comes out 1 hour before the open, so don't be caught off guard by that. And then more Jackson Hole, and then we got PCE and Powell Friday. Pretty mixed today. A couple things up like Meta and stuff. Other things, mega caps mixed. And we had some big companies reporting this afternoon. FOMC, this is climbing again, favoring the 75 basis point hike by 60-40 ratio and still in negative gamma territory. Talked about earnings. Nvidia, which also guided lower next quarter and should be taking a hit. There's that potential double. Salesforce, we'll check it. We can check in on that. Snowflake, Autodesk. So that's what we sit with some big ones. Williams Sonoma, more minor, but I wanted to glance at that. Tomorrow before the open, Peloton could not find any major news on that little pop today, but that's also starting to trade in the meme-ish category. And Dollar Tree and Dollar General, which I actually am interested in from a consumer standpoint. With that, hey Daniel. NVIDIA, yeah, big mix. We'll get to that chart. Josh, hello. Hello, George. Let's bring on Bob, the Bob button. Oops, that's a subscribe button. So if you haven't subscribed yet, please do because I just hit the wrong button. And like the videos. Now we get to the Bob button. Who's eating?
I'm eating.
You don't eat when you're on TV.
I have done that. Yeah,
You have?
I have. Yeah, it's kind of frowned upon, but
I
I
was
don't
going to
really,
say,
I don't really give a shoe.
you don't give what? What are you eating?
I was eating a crappy protein bar. I'm trying to get rid of them all.
Did they melt with the AC
No,
out?
those sweet taffy ones. Oh no, I would have loved that.
Let's
Oh, the
see.
AC out was brutal. Absolutely brutal.
Lauren says, "Hey Bob,
What's up, Lauren?
so what would you like to what would
What do
you
you
like
want
to
to cover
chat about,
first?
Bob?"
What do you want to cover first? You want to cover durable goods? You want to cover crude oil? You want to cover what I think will happen at Jackson
Well,
Hole?
let's cover. Well, durable goods happened today, so let's hit that first.
GDP, PC deflator. Go ahead.
Let's hit what already happened, which
Hmm.
first off would be durable goods.
Yeah. So durable goods, you already showed it better than expected on the X transportation number. So that basically means X airlines, right? People ordering a plane, for example, a little bit better. There was a dip in airline orders. X defense, better month over month than the last figure. Um, and the headline, month over month, missed expectations, but they revised last month's higher. Um, but the part when you really dig into the numbers, there were two real things that were missing. Um, Corporate capital expenditures were way down. They were offset to a certain degree from the view of the number itself. They were offset to a certain degree by consumers having bought what I consider to be their last round of durable goods from the home sales that were still strong months and months ago. 0% financing is disappearing. Prices have risen. Stores discounted because they had actually stocked up on inventory, anticipating further supply shortages. They didn't anticipate necessarily a demand collapse, which it seems to me like we'll be seeing in the future. Now, pending home sales. Let's talk about that a little bit. Pending home sales was better than last month, okay? Down 19.9%. But last month's was revised lower to 20.2%, down. Month over month, down 1%. Forecast was for down 4%, but they revised last month's worse to down 8.9%. Now, the interesting thing about this is pending home sales, very much like the why question in the hierarchy of questions for traders, pending home sales to me is the weakest in the hierarchy of home sales figures. You've got the housing price index, you've got new home sales, you've got housing starts. Housing starts goes to what the inventory is going to look like. Home sales, obviously the case Schiller, that's obvious. Home sales, are prices going up or down? Existing home sales and new home sales, those are actually sales, right? Pending home sales, contracts that have been signed. So that includes people who may not actually get the loan. They may not get approved, right? They may be taken off the buyer contract by a builder. And also, the consumer can walk away from those, give up their deposit or earnest money or whatever it was. So pending home sales tells you very little. And that's why you get these revisions. And the last two revisions were worse. I suspect these two numbers will get revised down as well, considering the move in interest rate since the recording of these particular numbers were taken, which was slightly higher. So overall, I think the data was mixed to bad. I don't think it was really good at all when you break it down into the durable goods orders. And that lines up with the PMIs that we saw yesterday. The PMIs, the S&P PMI, important to know that those are small to medium-sized businesses. That's from yesterday. Basically, everything was awful except for UK composite and UK services. We did have US services still above 50, I believe, but the composite was just barely
the services came in at 44. The manufacturing came in at 51.
No, I'm talking about UK.
Oh, UK.
UK. Yeah, UK had the best set of numbers of the bunch, but they were all really terrible. Services in the US came in a contraction. The composite came in a contraction. Of course, you would have a contraction. Services is the major part of our economy now. But remember, when you're looking at the S&P stuff, you're looking at small to medium-sized companies. Okay, you're not looking at the big caps, which the ISM measures. Now, you could look at that as being, okay, so it's not a massive part of the economy. It is, but it is also the job creators. So if they're doing poorly, labor is going to suffer down the road. So that's it for the recent data. What else do you want to talk about?
All right. Before we get to crude, any thoughts on tomorrow with GDP numbers, continuous jobless claims, or anything else that's coming out tomorrow morning before you open?
So GDP, there's going to be this revision and then two more. There's a second revision, a third revision, and then what they call the final, which is the fourth revision, right? Everybody's expecting the GDP number to be revised higher. I think the estimate is for going from down 1.6 to going to down 0.8. It's a big revision. I think there might be a little bit of politically driven motives in those estimates. So if it misses, that's really bad. You could see us actually getting to flat to positive if tomorrow's revision comes out at minus 0.8 or better than that. So it's minus 0.7 or minus 0.6. Those would be really big, almost fishy numbers, in my opinion. But if the second revision isn't revised much higher, than the estimate itself of minus zero point 0.8, it's almost impossible that it gets to positive by the final number. So it really just, to me, goes to the conversation of whether we had 2 consecutive quarters of negative growth. Doesn't matter because they say that's not the definition of recession anymore. Fine. I'm fine with that. We have had recessions without 2 consecutive quarters of negative growth. So I don't think it matters so much. I think it more becomes a talking point of market participants in terms of conspiracy theories if it ends up being positive more than anything. I do.
We got to have something to talk about then, don't we?
Always got to have something.
All right. Any thoughts on jobless claims?
No, not really. I mean, last week was the first week that jobless claims missed to the good side of things in about the last 8. And then we also had a streak of about 10 out of 12 where jobless claims was worse than expected every single week. The continuing claims last week was worse than expected. So obviously, one data point does not a trend make. So that's all I would really be watching is if jobless claims tomorrow beat expectations or missed. Was it worse or better than the market expects? That's all I really be looking at.
All right, let's jump to crude.
A little bit of strength in that crude data this morning, was there not? The draw, 16 million, I think I saw. Yeah, 16 million. Let me pull that up. I've got the actual EIA here. Okay, so where is it? Crude inventories, excluding those in the SPR, I'm sorry, decreased by 3.3 million. Refinery runs were 16.3 million, which is a really good number. But inventories decreased by 3.3 million. Inventories are about 6% below the 5-year average for this time of year. Okay, so that means we're still undersupplied versus the 5-year average. And by the way, in that 5-year average is the pandemic where we were massively oversupplied. Okay, so that's actually a little bit of a skewed number in my view. Gasoline inventories were unchanged from last week. They're about 7% below the 5-year average. And we also saw refinery utilization creep back up a bit. I don't know if any of you have ever heard me talk about these numbers before, but I watch refinery utilization quite a bit because it represents demand on the ground. And we're getting close. We're not there yet, but we're getting close to what's called refinery turnaround, which is when the refinery shut down big pieces of the apparatus in order to retool for winter blend gasoline. They haven't done that yet. And we dropped 2 weeks ago from 94.3 to 93.5, meaning that demand had slowed ever so slightly. And we saw that in the data. Gasoline demand from July 2022 was lower than July 2021. But we crept up a little bit here today, so that shows a little bit of an uptick in demand. I'm curious to see if that's a trend, because if it's a trend, it's likely to drive prices higher in the short to medium term.
So short term, do you see the crude rallying continued? We tapped on the 200 again from the underside today.
I still am overall bearish crude oil, but I'm bearish to neutral. I'm not all out bearish anymore. We've obviously got that double, but we don't have a clear path trading into it. We don't have a clear we are reversing a down move, but it's a very choppy one. So the path higher to me is a very choppy path higher. I suspect it was interesting this week, by the way. OPEC's oil minister, I should say Saudi Arabia's oil minister, Prince bin Salman, I can't remember his first name, and it's a long one, said that they could cut production. He said that he called it a yo-yo market in crude oil. And he said that basically it's giving a false sense of oversupply. Of undersupply, but the market is actually, hold on, I said that backwards. It's giving a false sense of oversupply, but the market is actually still undersupplied. And the EIA figures kind of bear that out, being 7% and 6% below the 5-year averages, which again include the pandemic. So, yeah, it's not a great situation when they're already saying they could cut production. They're not, and they don't have a meeting, I believe, until late September. I could be wrong about that. But they can always call a meeting. And if they call a meeting, I suspect they'd be cutting production.
Okay. So going into, we got Jackson Hole Friday. Let's jump back. Broad markets, we got a little bounce today. What do you see going into the next couple days?
In what? I'm sorry, I missed it.
Just in like the S&P, the Nasdaq, we up until we got Powell speaking on Friday from Jackson Hole. What do you see leading up to that?
Yeah, so there's a couple of things I'm looking at from Jackson Hole. I think the Fed has to be hawkish and very, very hawkish. I talked about this on a couple of interviews today. Um, from my perspective, the Fed has two mandates and then they have a phantom mandate. Okay. The two mandates are price stability and full employment. They've failed horrendously on one. And you can argue that they haven't had a lot of control on the other, but if you are keeping score, they've been fairly successful at full employment. We all know which one they've failed at, right? It's been inflation, stable prices. By their own words, their target's 2%. Last read of CPI, we're at 8.5%. Even core, which again, core subtracts the things you actually buy. So I don't know why they like that so much, but whatever. Core CPI, even core, is at 6%, 5 point something, I believe, was the last reading of the core. The phantom mandate being asset prices, right? And asset prices retraced 50% of the bear market move. So when people are like, well, they're concerned about stocks are doing pretty well, right? So if you were ever going to throw another hard punch, right now I'm working on an article that basically says, does the Fed want to be Mike Tyson or Floyd Mayweather, right? And it's my contention that they should be Mike Tyson, but I don't know if they will. It's a really good scenario for them to throw another hard punch with, again, equities performing fairly well, considering that they just did 275 basis point rate hikes in a row that I've never seen in my career. And considering that now the probabilities are moving back to 75, I suspect because people are thinking exactly the way I'm describing that they're thinking, the Fed can look at this and go, look, stocks are doing just fine. Still in a bear market, but they're doing just fine. They aren't down 50 or 60%. And we're at 3.5% unemployment. Now, the Fed's moves take anywhere from 6 to 9 months to actually hit the market. But imagine if they don't do enough, and 6 to 9 months from now, we're still looking at, I don't know, 5.3% year over year, 0.8% month over month, PPI numbers through the roof, and unemployment only at about 4.2%. What are they going to do then? I mean, when you're talking about 6 to 9 months for their moves to affect the market at all, that means the slowing we've seen so far was based on something else. So I suspect they need to come out and say, you guys don't get it. We're actually going to continue to fight this. It's the only mandate they have left that's not doing well, even if you include the phantom mandate of asset prices. So I suspect that's what's going to happen. I've been saying that for a week and a half at least, that I suspect that's what's going to happen. Neil Kashkari talked that way, and Neil Kashkari was actually a dove. I mean, he was considered to be a dove. And he said, no, we have to keep fighting inflation. So, yeah, I don't know. I mean, that's what I think is going to happen. And I suspect the market's going to react, I don't want to say violently to the downside, but to the downside. So.
All right, now before we wrap this up, any thoughts on yield curve, notes, bonds?
Well, the yield curve itself, the twos tens moved further away from its inversion lows, which I believe the inversion low is about 48 negative. Fell a little bit back today. I don't have. I mean, look at that double bottom.
Yep.
But I don't have a whole. Yeah, I don't have a whole lot of opinion on the level of it anymore. simply the fact that it's stayed inverted this long, if there's not a recession, it's one hell of a head fake. Yields themselves, they rely on Jackson Hole again. Again, if the Fed is going to continue to be aggressive, you're going to see this inversion go back down to the lows, because it's going to mean that A, they're going to be fighting inflation, and B, at least in the short term, they don't believe inflation is under control yet, which I suspect would mean higher long-term yields, which we've kind of started to see. So it just depends on whether the market believes that if they're fighting inflation, that it's going to work or not. But I think you're looking at higher yields across the curve going forward.
All right. Well, any
I
other
don't think everyone is.
thoughts on anything before we wrap it up?
I don't think everyone is looking at Starbucks Group Holdings. I don't believe everyone is looking at that.
It wasn't on my radar screen, but you know what?
There's two daily candles. I mean, what are you going to look at?
You're going to look at two daily candles.
We can't do price action analysis on a low float IPO that has no data.
Well, you can do on two candles.
What are you going to do on two candles?
I do analysis. I can do it on one candle.
You've had your harmonics on the one big candle, right?
Yeah. Hey, you can still. That's why. Look at this. Look. So from yesterday, you're targeting the 12.5% retracement, and boom.
Can I respond to this last comment here?
Which one?
Watch any major live stream on YouTube, any major live streamer on YouTube a day ago. They were all talking about STBX. Watch the Wolf of Wall Street, NASCAR. That's what the YouTube live streamers are doing. Okay, they're pumping things that they can get in or are already in. And they're being paid to do it. So no, I don't watch a bunch of, I'm not knocking them, by the way. I'm just saying it's a legal-ish game, and that's why I don't pay attention to it. Okay? I just don't. I mean, just look at this chart. If you're looking it's very similar to what was going on with the meme stocks. The meme stocks lasted a lot longer because it was actually a pretty large retail base getting in it. But a lot of these people are trying to mimic what happened with Wall Street bets. They're just doing the old Wolf of Wall Street pump and dump, and I don't have any interest in that, my friend. I'm not paying attention to that because we have large portfolios that we watch, and this is never going to be a part of it. But if you're somebody that's interested in helping your retirement account, doing some active trading to bump up the retirement account, if you're looking to turn $1,000 into $10,000 in 2 days, you're in the wrong place. That's all I'm saying. I think you're looking at the wrong radar screens, NASCAR.
It wasn't on a lot of major big players' radar screens.
It was on YouTuber radar screens.
Yeah.
It wasn't a lot of radar screens.
And there's a big difference between the YouTuber community. We just happen to be on YouTube. I think we're a counterbalance point to most that goes on YouTube. Because, look, there's plenty of channels. If people want to go and learn about STBX or others, why we don't pump meme stocks.
You can go there for that. And by the way, NASCAR, I hope we don't lose you. I like you. You've had some really good input in this channel. But when you just look at this pattern right here, okay, that's not something I want to tell people about. I really don't. Because the vast majority of those people will get in somewhere near that first candle and will pray that things turn around. They won't have a strategy behind it. The vast majority of people. I'm telling you, I used to follow a guy. I didn't used to follow him. I used to know him. I used to know a guy, and I really am uncomfortable saying his name, but this was 7, 8, 9 years ago. He asked me to come on his channel, and he asked me to be one of the people on his channel. And all he was doing was screaming and yelling about the trades he had and he would charge people. Okay, now it's YouTube. YouTubers can make money off of just views. But back then, you weren't able to do that. You had to charge for the channel. So he would scream and yell about all the money he made. I hope you're still in here, NASCAR. You might have closed out. But he would scream and yell about all the money he made. And then people would join and they would pay him $350 a month and he'd get like 1,000 people. Okay. And he would take that money, he would dump it into his trading account, and they would do all kinds of high beta trades. And he'd make money on a handful of them. And then people would re up the next month. And then he would get wiped out, but he wouldn't care because those people would never quit watching him. They would just keep paying, hoping they would get their money back. So that's, in my view, looking at this kind of a chart, that's what these YouTubers are doing. And I'm not trying to pick a fight with anybody. It's just not what we do. It's not. So I hope we don't lose you. I thought you had some good inputs on some major subjects. May have lost you already. I don't know. But I hope we don't.
But again, I mean, if you just, there's just too much crap out there, like all the people who from last week in BBBY, that are trapped. And this is where they turn into diamond hands. Oh, well, hey, I got to keep holding it, hoping there's going to be another pump before it goes into reorganization.
Yeah. This is just a modern day version of Wolf of Wall Street.
It's what used to happen on the pink sheets all the time.
Yeah. Yeah.
That's why I refer to these. The meme stocks are literally, most of them are pink sheet stocks. And if you look, even BBBY, it's why the first thing I glance at, what's the P to E? Oh, guess what? There is one. There isn't one. Guess why? Because they make no money.
I don't know. Did we lose NASCAR? Can you see if he's still in here?
Yeah, I haven't seen another comment.
I don't know if you can see who's watching or not, but
no, not easily.
Yeah, I'm not knocking it, but I am knocking it. I'm just saying it's not for us. It's as if you're, I don't know. I don't even know of a good comparison.
Okay. It's just, there's just so much information, like all the stuff that was put out with the wrong information about the AMC and ape shares and everything else on YouTube by YouTubers.
See,
you want to respond?
I mean, I really, it was a 10x mover if you were in on the move, but the vast majority are not. Okay? The vast majority of people get in after the fact, NASCAR. I'm sorry. They do. You can look at the actual official volume stats and you'll see that. All right, you'll see the biggest volume spikes on those highs. And we can't promote that, man. We just can't. It's not what we do. And also, it's a crapshoot. Like, when you say I applied for all of those tickers days before the debut, based on what? What made you buy Starbucks Group Holdings? If it was because all of the YouTubers were talking about it, it's not something we do. Okay? Because they're in earlier than you. Most likely, the high volume YouTubers, the people with tens of thousands and sometimes hundreds of thousands of viewers, the companies give them shares before you get them. Okay, they do. It's not illegal to do that, by the way. Not illegal to give somebody shares as a promotional payment. Now, it probably will be soon down the road. It's not illegal. A Network One financial underwriter, they haven't had a bad debut since CPOP. So you're looking at 1-2 days of moves as a good debut. You're calling STBX a good debut? I mean, I understand if you got in before it was released, fine, it was 10x, 50x, whatever. How many people are trapped? Look at how they just dump it the minute it's happened. When Facebook had their IPO, they IPO'd somewhere around $18, $19, ran up to 38, collapsed. For years, people were saying what a crappy debut it was. We're just talking about different things, bud. We're just talking about different things. That's okay. It's all right. It's like steroids versus just getting in shape. I'm good with it.
Anything else? Any thoughts
Nope.
about Peloton?
Hey, Peloton had a great debut. These things are not investable. They're just not.
Peloton. See, I'd rather wait. You know what? I'm a huge fan of Peloton, but not the stock.
Yep.
What would you say it was up for today, Rich? On they're going to start on Amazon.
One
They need
more
a lot
comment.
more help than that. They're going to have to go into reorg.
One more comment, and then I got to go. You see it?
Which one? This one?
GM went bankrupt before the financial crisis. Should I really be upset that everyone got trapped and lost money on that? Everyone didn't get trapped and lost money on that. Some people did. General Motors was a public company for decades, paid dividends for decades, and made money for their shareholders for decades. The vast majority of people that got shut out of GM when they went bankrupt had already earned thousands and sometimes millions of dollars before their current holdings went bankrupt. So no, they're completely different, dude. Completely different. And again, listen, you're playing a game that I as long as it's not illegal, I got no problem with you at all, at all. And by the way, we don't talk about GM much here, but it's complete. I don't feel bad for anyone that was in any stock that went down. I don't. But what I'm saying is for our members, I'm not telling them to get into low float IPOs because I don't want to be the reason that they're up there at the top and these things collapse. I don't want
It's
to be the
why
reason.
it's why we weren't sitting there promoting the SPAC craze. Look at all those SPACs.
Yep.
I mean, where do you hear about the Shamath SPACs now? I mean, some of these people have lost tons of money on these things. Where do you hear about them anymore?
Yep.
You know what? We didn't promote those either because some people got in, they got the timing right, they made a bunch of money, and they bailed and they walked away and went on to that. Just like we don't promote NFTs.
Yeah. Listen,
You know,
you got your guys NASCAR that you follow for that. I'm fine with it. I hope we see you in here. But when you say still no love, everyone's talking about it, it's never going to apply to us for this kind of stuff, dude. We're talking about active investing, sustainable active investing, and longer term sustainability. That's it. All right, I got to go. Love you guys. I will talk to
are
you
you on
soon.
tomorrow morning? I mean, tomorrow afternoon?
Yeah, I'll be on tomorrow afternoon.
Okay.
NASCAR, come and join us, buddy.
All right. We'll
We'll
talk
see you.
to Bob tomorrow.
Hold on, one more.
Hold on. What's Kalani say? Bob, seems like every major economic powers are doing to crap. Do you think investors will flock to the U.S. market like they do with the dollar?
To a certain degree, but just keep in mind that everyone doesn't have to flock into the U.S. equity markets. Okay. Um, we're about to see, well, let me rephrase that. We've already seen double digit inflation in the UK. I suspect we'll see it in the EU. Um, Citigroup has a target of 18% this coming January for UK inflation.
Oh,
18%. So when you look at it from that perspective, yes, I doubt that people will flock to those markets, but they don't have to go into U.S. equities, Kalan. Remember, they can actually go into treasuries. They can just exchange and hold U.S. dollars. They might go into gold, which is the inverse to the U.S. dollar in theory. But the flight to safety usually involves the U.S. dollar and U.S. treasuries. All right, hopefully that answered the question.
yeah. And here's the great chart. Energy prices in the euro area. That is absolutely brutal. You want to talk about something that looks like a meme stock?
Hey, Rich, I think the U.S., I'm sorry, Mike, and then I'll go. I think the U.S. rejected their proposal. I thought I saw that an hour or so ago. I'm pretty sure they rejected the proposal and told them to go back to the drawing board. But we'll see. Don't quote me on that.
All right. Well, there you have it.
All right, guys.
Okay.
Cheers, everybody. We'll talk to you soon.
Bye. Hey, everybody. How's everybody doing? Slow and steady wins the race. So let's just do a quick little recap. I'm watching for some more potential follow through tomorrow. We had that little double play out this morning. Come out here topping out. Remember, once you completed the double, you could also look. Just want to point out some stuff. Remember, put on your retracement harmonics. I don't cover everything all the time, but on the way to the double, you got the close above that. So above the double target, what do you target? The 87.5 to the 100%, and you watch for a reversal in that zone, pulling back now. So that's just how you come up with the next target. Again, sort of on a somewhat of a teaching kick, just trying to help people. And if you want, apply it to your low float IPOs. As long as this is the most recent rally, why did I flip it? Because we're already between the 87 and 100% level. But the key thing I'm watching is this 41.2875, so 41.29 area. As long as we don't get a key close below that, going to be watching for some slight more upside. Why? And it's not because we haven't triggered the next potential double, but let me pull these off right now. But we have daily cycles trying to turn up, coming out of over sold condition. Now remember, the weekly is going to roll over, so this bump could be very short-lived. The only other play then going into tomorrow and Friday would be this potential double bottom. That is about it at this point. So for overnight price action, that's pretty much what I'm watching is those harmonics I already took off. Again, you got a lot of key support points. So, there's the 41.37s. Then you still have the 41.25s and then the most recent lows. But just pay attention overnight to the key harmonics. And if we go up, you're going to see pretty significant resistance between about 41.57 to 41.61. And for overnight, in order to trigger this potential double, I'd at least need a 4-hour close above there. So that's the way I'm looking at it. We're going to go through this quickly. Again, NASDAQ, double bottom complete. NASDAQ, you got to go all the way back here technically. It's only going to make it slightly lower, but 12,894 is the key level you're watching for a close below. Other than that, a return to about 12,987, and then this 13,000 to 13,011 is major resistance. Above 13,1850 on a 4-hour closing basis would trigger the double. And notice the rotation in there did not invalidate it on the bigger time frames. You can see it really nicely on that 4-hour basis. Again, everything, the Dow hit its patterns. We don't need to cover all this. We'll just have more information by tomorrow morning. But the key resistance area I'm watching in the Dow right now is this little, about 33,020. You can come up with your key support back there. Interesting enough, Russell closing above the rotation zone. Russell does have the double, so let's now map out that Russell double, which is confirmed, by the way, but not yet triggered. I need, again, a 4-hour close above this high, 1940.90, so essentially 1941, 1956.50, 1964.30, 1972.10. Remember, on all these markets, all the financials, we have clear path moves. So if something happens tomorrow, you could see, to the positive side, you could see some still acceleration to the upside. Or if Powell comes out too dovish on Friday and we get acceleration to the upside. Or just don't be caught off guard because you have a clear path move and you have a pretty big vacuum in here. Other than that, Tesla, we filled that gap I was watching for. It got rejected from that price. The double top is still valid. We'll take a look at that tomorrow morning. Just touch on a couple other things. Bitcoin hit the first horizontal channel breakout. This is still pretty much just a recovery flag pattern. So I'm watching for the next rollover play once we get to the top in that. It's in the cycle top. Dollar index, still potential double top here. Still potential double top. I'll get back into more bullish mode above about 109. Just a recap on the VIX. VIX triggering this double, so I am going to continue watching for a pullback at least tomorrow in the VIX. We'll take a look at that tomorrow morning. Let's take a look at some other stuff. Peloton. Big reversal. By the way, this is now a potential double top in Peloton. I'll be shocked if, well, their earnings estimate's horribly low. So I can't say I'll be shocked if they miss earnings. I'll be shocked if they report positive earnings. So that's going to be key. To the downside, you have a gap left behind you on the 1 hour chart. There is no double top on that. That's just a sideways channel. I'd be watching, breaking down back below 13 would be the move back lower. Let's check on, and NVIDIA. Remember, I am long-term bearish. This move is probably going to trigger that double. So we're going to get the double even on a gap fill. I personally would be targeting the rollover play for an eventual retest of the lows back in July. So that's why I'm watching this as long as this opens tomorrow. I mean, right now it's trading into that double territory. So even if it rallies, I mean, it's probably going to trigger anyways. They really slashed forward guidance with the, earnings don't look so bad. They beat by a penny and revenue, but they slashed by over $1 billion forecasts, which is substantial. So that's what it's trading at. If we just look at this, they beat. Why is it down? Because we're seeing this a lot now. We're seeing major guidance slashes. So that's a couple other things. Autodesk up, but I'm going to be watching for a gap fill. Autodesk did beat. I don't know if I did not see if they gave guidance on that. I'm going to be watching for an eventual gap fill play in this, or a potential double top on a continued rally. Right now, that's off. Snow, I know, was big up, pretty big up. I mean, Snow finally reported something positive. Revenue in line. So that was good for Snow. I'm expecting this to, however, pull back on the next NASDAQ rollover. What else do we have? WSM down. I did not see their guidance on this. They did beat, but they probably had to guide or guide lower because it is down, and they actually beat pretty strongly. So that, again, I want to look back for that to see if they did guide down, because that's a sign for the more high-end consumer. They might be starting to monitor their purchases more closely. What else do I wanted to cover one other thing. I was trying to think about that. Salesforce. One thing, remember, sometimes I don't have patterns, okay? Salesforce, and I should have covered this before, I forgot over the last couple days, but there was a pattern that triggered. So this is the difference. When I say sometimes I don't have a pattern and it's a crapshoot going into earnings, because there's no pattern. So it's literally a crapshoot going into earnings. Salesforce did have a pattern. Triggered back on the 22nd. Today gave a nice rally, so you could easily get in at proper reward to risk, and the probabilities even going into earnings favor a downside move. And here were the targets, and you got a huge gap down. Now, the other thing, if this does, I know somebody's going to ask me. If they don't ask on this, they'll ask me because they watched it on the replay. What do you do if it hits the target after hours? You take profits. You don't have to hit an already executed double. If it hasn't executed during the day session, I am hesitant on executing them, because you can get exaggerated moves, but this executed and gave multiple times to get in. Multiple times to get in, and if it hits the profit target after hours, then you take your profit. So you can have a resting order in there. Okay? So that's where you sit. Already hit the first and second targets. Just a little point of clarification with that. So that's the difference between having a play going into earnings versus having no play and just, all right, what is it? Are we gapping up or gapping down? The NVIDIA earnings is going to trigger the double top on the SMH. Yeah, that'll probably, unless it bounces back. But you already have it confirmed, just not yet officially triggered. This close was just above the trigger point, so it's confirmed because it's traded below it, but that's going to trigger. So I'd watch if you were going to play this to the short side for a little bounce move, and then then the rollover play. And other companies, other chip makers, if you have NVIDIA guiding lower, you're probably going to see more revised guidance on other chip makers. So that could easily push the SMH easily down to the targets. All right, that gives enough information for today. Remember, you got Peloton earnings tomorrow. I'm really focused on Dollar Tree and Dollar General. That's going to be interesting to see how they come in. And we will be here 8 a.m. Central tomorrow morning to start looking at everything and setting ourselves up for the price action tomorrow. Remember, some big numbers. We'll be here at 8. Big numbers coming in at 7:30 Central. And then we have to really prepare for Jackson Hole Friday and PCE Friday. Did I misread that? On Snow reported a negative EPS. Did I misread it? If I misread it, I thought they reported a positive 7. I'll have to scan through my news feed because I don't have it up here. But let me know if I was wrong on that or if the numbers are wrong on this platform, because that's where I was reading it from. Because I'm just scanning through stuff real quick and I don't have it in front of me. So let me know if it's actually negative. Okay, TradingView is wrong. Thank you. So they're gapping up on so it still was not positive earnings. So this is just, again, your play because it's snow. What would be targets be for anybody interested? Oops. Let's see. Let's see where we're coming in roughly. 188, 60, 189. So you're pretty much trading the top of the channeling flag pattern. So we'll see. I'll be watching for the rollover play in that again also. That'll be a nice gap fill play for this, but it's already trading and you have key resistance up here. So it'll be interesting. I'll be watching for the breakdown play, especially if they did not report positive earnings. Thank you for correcting that, Rich. Again, if anybody sees anything that's wrong or I state something wrong, please put it in the chat so we can get it corrected for people. And I will have to verify that after the live stream is over because I do like to verify. Not that I'm saying Rich is wrong. I just always like to verify for my own edification because Rich is probably correct. So, thank you, Rich. Again, thank you for everyone who's showing up for the live streams. With that, I will wrap it up for now and see everybody tomorrow morning. Everyone have a wonderful night. Bye for now.